Hi folks, welcome back to the channel and a happy new year to everybody out there in YouTube land. It has been some time since I posted a selection of different things going on at the moment. My computer broke about 4 weeks ago. Been struggling to get sorted out with a new one. I'm changing job. In fact, I start a new job tomorrow. Christmas has been and gone. My little man wasn't too well, etc, etc. So all things piled up on top of each other. Didn't really get much content out, but things are changing. Going forward into 2022, I'm really excited about getting this channel and this content moving again. So without any more messing about, let's just get straight into this. It's a Trading 212 portfolio update. It's been a couple of months since I last did one of these before, and we were sitting at around about £30,151 just in the middle of October. I am delighted to tell you that that has crept up towards the end of the year, and we are now sitting at around £33,805. So of course, anybody who has watched this channel before will know that the overall target here is to hit a portfolio of £100,000. That is the sort of first landmark I really want to get to. So things are on track. I'm giving myself a good few more years to hit that 100,000. So we are actually well ahead of schedule at this point, thanks largely to a good couple of years in the stock market. So let's just see what my portfolio is looking like right now. So we jump straight into the ISA here, and you can see it's sitting at £8,496. This ISA was only opened in April of last year, so obviously with April rolling around here pretty quick, the position for my ISA is once again up for grabs. I'm not sure if I'm going to keep with 212 or not. I've been looking a lot at Invest Engine, but that's for another video. So just looking down this particular portfolio, this is the one made up largely of Vanguard funds. You can see there the Vanguard FTSE 100, the FTSE All World Index, the FTSE Developed World Index, the Emerging Markets, and the S&P 500. So they're all doing pretty well. The FTSE Emerging Markets has been lagging behind quite a lot compared to the others, but apart from that, things are looking pretty good. There's this return here of £574.12p, which they reckon is a 7.25% return, but that is only 7.25% of return relative to the money that's there now. So if I dumped another £10,000 in there, that return would decrease significantly because it just looks at the amount of money you've made versus how much is in the account right now. So it's not really a true reflection on how well the money has worked, but nonetheless, 500 quid for the year isn't so bad in there. It's topped up with a couple of other interesting ETFs for me. So the iShares Electric Vehicles is in there. I have a small position in it. Global Clean Energy, I have a small position in this one, and of course the VanEck Vector Video Gaming ETF as well. I think these three sectors are going to have some pretty good growth over the next few years and beyond. So I'm keeping a small position in these in my ISA. I actually have them in my Invest account as well, which we will see in just a minute. So I have two pies that make up my Trading 212 investments. The Vanguard ETFs one here is the one I was just talking about a moment ago. We can see if I look at the holdings there, it's made up entirely of Vanguard ETFs. The good thing about these pies is that you can set them up to auto-invest any dividend income, and you can see there that I have in fact got £73.78 in dividends over the past few months, and they have been reinvested automatically for me. So that's pretty cool. It's a pretty hands-off approach, and definitely if you're a Trading 212 user, I would implore you to have a look at these pies and see how they can make your investing life a little bit simpler. So if we jump on over to the Invest account, so this was set up a couple of years ago when I had my ISA with Vanguard, and of course you can only have one stocks and shares ISA here in the UK at a time, so this is a little bit of legacy from that. I have been moving away from holding positions in individual companies with a few exceptions, so this has been culled quite heavily over the past 12 months or so. So the first up here is Amazon. Amazon are a cash creating giant. They have their retail arm, obviously. They're getting the cloud computing with their AWS, all these great things going on. They have so many ways to make money. I added a little bit of Amazon this month. They're up to 0.5 shares in that one. Coca-Cola, global brand again. They pay a half decent dividend. They have grown quite well for me. As you can see, they're up 20.66% since I started investing in these guys. Coca-Cola, yep, here to stay, very much so. iShares Electric Vehicles, we've seen before. Global Clean Energy, we've seen before. Legal & General Group is another big financial company here in the UK. They do insurance, financial products, all kinds of stuff. They've been doing very well for me, as we can see there, and again, another big juicy dividend out of these guys every so often. Microsoft, I love Microsoft. So powerful, such a big company. They're going to keep going from strength to strength in my view. National Grid, National Grid, I used to say they're the most boring stock possible to buy. Nothing really changed with them. But over the last 3 months, they have started to look pretty good there. Again, there's a good dividend out of these guys, a fairly stable stock. They might well be culled soon enough in favour of my index funds, but for now, they're there. Palantir has been a bit of a disappointment for me, I have to say, 26% behind. I think they're a good company. I think they're going places. I think they're going to be really, really big. I will definitely be adding to my position in this company over the next few months. Persimmon are the house builders. They used to get a terrible rep. Things have improved for them, I think, over the last couple of years, but 7.92% behind. Still holding out for this big infrastructure boom we're supposed to be getting in the UK, but hasn't arrived yet, and it'll probably be another one that will get culled very soon. Unilever, a little bit behind there, but they're still paying a half decent dividend. And Van Eck Vector's Semiconductors ETF has obviously done quite well for me there at 30% plus. And the video gaming ETF we've already seen. Dividends since I last spoke to you have come from places like my index funds, from Coca-Cola, from Global Clean Energy, and all in all it comes to £45.55 since the last time. And in terms of portfolio changes, I already mentioned earlier I bought 0.1 shares of Amazon, and I was funded by selling my renewable infrastructure group shares there. So they came in with a half decent profit. I like Trig, but as I said before, I've been trying to get rid of holdings in individual companies and moving them into the ETFs. I just couldn't help myself with another tenth of a share of Amazon, though it had dipped round about from 3,600 down to about 3,298, and I just thought it was an opportunity to add a little piece to my holding in Amazon. So that brings us to about 15,270 quid invested with Trading 212 altogether. The extra amount of money I have invested then is with Vanguard, and it's sitting at around £18,534. It has grown pretty well. There's a little bit of cash sitting there because things aren't automatically reinvested for me over at Vanguard. But smoosh it all together, and today we have 33,800 odd quid invested. So a bit of a goal for 2022 is to add another £10,000 to my stocks and shares ISA. I'm not entirely sure where that's going to be. If you'd be interested in seeing a video about some of the research I'll be doing to choose an ISA provider, you can leave a comment down below and let me know the kinds of places that you're looking at, and maybe I can have a look at those too and maybe help you out there with any questions or anything like that you might have. The landscape with Trading 212 has been a little bit weird over the past 9 months to a year. There are still no UK sign-ups being accepted, and that is not concerning as such, but it's a little bit strange that they would be preventing large swathes of customers or would-be customers trying to join their platform. Every time I ask any of the reps about it, I get told that they're very, very close to opening the doors again, but it's been like that for a little while now, and it's something just a little bit troublesome that can't get any clear answers, or there's no real transparency about why that might be. It's one of the things that's maybe putting me off renewing my ISA with Trading 212 this year and looking at other options. In saying that, Trading 212 have been a phenomenal provider so far. They have been very good in terms of their speed, their customer service, in terms of the offerings that they have of what I can buy on the platform. And from that point of view, it's been very, very good for me. That said, nothing stands still for too long around here, so we'll keep on top of all the different options. If you are interested in the kinds of things I consider when I'm choosing an ISA, I have another little video here you might be interested in. I'll see you in the next one.